Good evening, everyone, and welcome to another edition of Bleeding Crypto's BTC Market Update. Today is Sunday, August 25th, 7:50 p.m. I know it's a lot earlier than I normally make these videos. However, because of the developments that are going on today on Sunday, which is what we had talked about on Friday, I call this a scam pump weekend because Asia, very often on weekends when the rest of the world is closed, they like to come online and they love to run the price up. And then New York comes Monday or Tuesday and smacks it back down. Usually on Monday. If they don't do it on Monday, they'll come back on Tuesday and they'll smack the price right back down to where it started on Friday. So do we get that? I don't know. And I really don't care because at this point, what I do is that I look for validations and invalidations. So this morning, I actually alerted my team when I woke up this morning I think I alerted them around 6:30 in the morning or so. And I had a plan. There was a chart that I shared with them on the lower time frames. And I'll share that with you guys actually. This is the chart that we've been following, is this one right here. And just let me go over this one. This is on the daily time frame. And then we'll look at the one that I did for my team this morning, and we'll go in a little bit more detail on that particular chart. For this one here, because we've been following this on the series that I've been doing for you guys on a daily basis, well, Monday through Friday, better said, we got our break. Look, we got our break above the purple line. We went and grabbed that liquidity right there at $63,400, like I was, like I've been trying to express to you guys for quite a while now. There was two areas of liquidity: 61,200 that was taken out earlier in the week, and then the last one here at 64. I mean, there's more here, but locally in this area here, those were the two that I was concentrating on. Then on Friday, we talked about this area here, this M top, this neckline of the M top. This was going to be a very strong area of resistance. Now, we didn't go quite up to it, but we went pretty close twice up to that line there, which is the neckline of that area. So what I'm looking for is, because you guys know how much I rely on backtests, and I think I've showed you that more than 10 times already. So I'm not going to bother doing that again. If you guys would like to go to any one of my videos, you'll see how often these back tests work out. So the back test to this is what I am expecting, and it's what I'm waiting for. Now, I don't know if Asia is going to do it tonight. Typically, Asia doesn't run down when it pumps up. For the most part, when Asia starts their scam pump weekends on Fridays, the last push is usually Sunday. Then sometimes Europe will continue it or just go sideways, and then Monday morning comes, and that's when we start seeing either the Monday reversal or the Tuesday reversal. So let me tell you what I'm looking for, because you know what? The truth of the matter is, Asia has only been online for a little less than 3 hours. Their official start of the daily open started at 5 o'clock my time, and it's 7:53. So 2 hours, almost 3 hours yet. So they still have quite a bit to go. So they can still, I believe, have a chance to continue to move it higher. There's 2 points higher that I'm looking at if we run higher. I'm not saying we are, but if we do, 2 points that I'm looking at. One of those is to break this area here of very strong resistance, which was prior support, resistance, support, so far and so on for the past 5 months inside of here. Now, along with those 5 months was the top of this diagonal channel. This area here, this area here, and here, that smacked the price down. So that, again, is going to be very, very tough area for us to get above. If we get above it, great. But for right now, I don't want to get too ahead of ourselves. I want to give you 2 areas to the upside. That's it. Local areas that I think have a very good probability of hitting if we are going to continue. I need to be very specific because it's incredible the ignorance that I have to deal with sometimes on Twitter when they don't understand what the word "if" means. So I'm giving you a scenario for the upside, and if that doesn't play out, a scenario for the downside. That's all I can do as an analyst. I don't have a crystal ball. I'm not smart enough to know which way the market makers are doing it, which way the market makers are going to take the price. So I have to make sure that I give you both scenarios and see which one plays out. Now, this one here and then this one here. Now let's do this. Let's go to the smaller time frames, and then let's look at this move in detail. I'm going to use a chart that I posted this morning for my team. So this was the post. This is a chart that I posted. I was looking for a deviation here, and we didn't. I mean, this is a deviation. It doesn't mean I had to hit right here exactly, but it actually did it a little bit later, like, I don't know, 7 to 8 hours later. Nonetheless, when was this? Yeah, this was 6 o'clock in the morning. Yeah, it was 6 o'clock in the morning. But I think the post was a little bit later than 6. In any case, I was looking for this. I'm looking for a move up in here as a deviation, and then a move back into this line that, look, we did not back test when we left. And this line, like I said in the previous videos, and I even showed you on Friday. So please go back to that video if you want to see it. We went back 5 months. Very, very strong area of support and resistance that we did not back test. Now, this area here was the area of liquidity. They went and took it. This was a retracement that I had on this first entire pump. We still haven't really, I mean, we bounced close to the 382, but we haven't really done anything higher than this. We haven't broken above or a clean close above this swing high. So these are just deviations above that high that we put in here. That's why I kind of put in that line as to show the deviation here, and wondering if we'd get another deviation here or if we just stop to it, but we end up getting another deviation just like this one here. Now, what I'm looking for, what I would like to see is for us to come down here and back test this. Now, this area to me, I think is going to be the crucial one. I think it's going to be the deciding factor whether we start heading back to the top of that channel or we go down and we get rid of that V-shaped bottom correction from the swing low of $49,000 and we do a back test of that area. I don't know, but I believe this is where it's going to start if we are going to make one move to the one side or the other side. And let me explain to you my thoughts. What I believe may happen here, let me do this here. Let me just put on this chart here. All right, the CMF looks really good right now. CMF is actually pushing up on the hourly time frame. Okay, so what I want to see here is I want to see a move down into here. I would like this area to hold. If we can hold, consolidate, or bounce, then I'm looking at the top of this channel. Obviously, this is going to be, we have to flip this, and then once we flip this, the top of here. That's what I'm looking for the bull case. However, I do want to see a back test, and I think it's going to be a very high probability that we're going to come down and we're going to back test this area there. Now, if we don't hold that, and we actually break below it, and then we back test the bear break of that, then I'm going to be considering much lower targets. I'll be looking at, no, actually, let me get, this is old. I'm going to be looking at then in the mid 50s to the swing low. And I say mid 50s because we do have strong support in that area. So let me go back to the daily time frame. Let me go into this daily time frame. So as you can see here, this is it's not valid. This here is the continuation rule that we did in the original video. So remember, this was the bounce, this was the swing high, this was the lower high, and we touched 618. So we took the swing high to the swing low, and we put a continuation rule. This was the invalidation. If we broke and closed a clean candle, a candle below the 0.50, then this comes into play. This one right here. This one did not come into play, so I'm going to delete it. We bounced off of here. Now what I like to do is I like to put a harmonic pattern on this to measure to see if within a reasonable margin did we complete the harmonic pattern, because harmonic patterns play out very often, and that helps us to measure the next preceding move after bouncing off the continuation rule. So the fact that we bounce off here and we have the actual data, now we can actually put an accurate measurement off the harmonic patterns. Very often I'm doing these kind of blind because I'm not sure if the AB equals CD is going to be based off the 382 or based off the 0.50. In this one, we have a nice clean. So let's look in here. All right. So this is AB equals CD. And as you can see, this move here calls for a move pretty much just like this one here, a deviation above the channel line. Look, this harmonic pattern, again, it doesn't have to go to the penny, but it's calling for 69,742. This is still running short. And I know, again, I have to battle with people on Twitter, and I know people do not want you to say it can either go up or it can either go down. But that's the reality of it. So I'm going to give you a good case based on the facts that I'm showing you now, why we could actually make it here. Not only because of the harmonic pattern, not only because we respected the continuation rule and we bounced, we never invalidated it, but look at the market structure that we have right now. Look at that market structure. Yes, I would like to see here. It doesn't mean it's going to happen. What I like and what I feel and what I need, the market makers don't care. What I have to do is pay attention to the data that's in front of me. The data that's in front of me is showing me a beautiful daily bull flag. This bull flag, in my opinion, has a very good chance of completing that harmonic pattern. And if you look at the pole here, and you look at this here, and actually let's do a mini harmonic, a subharmonic, if you will. There's the pole. Take this off of here, and I like taking the lowest point. There's that lowest point. As of right now, that's the lowest point. I don't know if it may come down, maybe put a little bit lower, sweep these lows. I don't know. But for right now, for the data that I have, it works. It works. But if this is not the path that it takes, we have to have an alternative plan. So I gave you, I believe, a very good detailed explanation of why I believe we can still go higher. However, I also started to explain to you that this area here, to me, is very crucial. If we don't back test this now, what may happen is that we're going to back test it much later on. Let me show you an example of that. Well, actually, let's see if there's an example of that. Let's see. When we broke through here, we came down. This is not really a back test. This is a back test here, and then this one here, and this was what, 1, 2, 3, 4, 5, 6, 7, 8. 8 days later, we're on day 1, 1, 2, 3. On day 4, 1, 2, 3, 4. This is the cleanest. This one we broke right above it. We came back, we back tested and right away. So that's not a really good clean one. This one we broke above it, same up thrust, and we came right down the very next day and we back tested and then we took off. So that's not a very good clean one. So there really isn't one, but at least you can see the importance of a back test and the importance of how quickly they usually happen. And when they don't, they eventually will come down and do that. And I'd rather it get done sooner than later, than from a higher price point, because that's going to kill the momentum. Because I hate using the word hope, but again, I'm a bull. I have a bull bias as a trader, but as an analyst, like I told you before, you can't have a bias. So though I would like for that to happen, if we are going to come down in here, guys, and get rid of this V shape and retest this area here and knock out the liquidity down here, I would rather it happen here or even here, but I don't want it to happen here, because the bull biased in me, the trader biased in me, I really want to see Bitcoin just go to all-time high and go much higher. I really want to see that happen again. I've lived through so many of these cycles. It's a great feeling. But it doesn't mean it's going to happen because I'm so strong. I believe I want it to happen. Not that I don't believe it's going to happen, because I do believe it will happen. But more, I guess the better term would be wanting it to happen. Now, if we come down here, like I mentioned before, and we don't hold it, and we do break below it, it's going to be, I believe, and again, this is maybe a bit of hopium, that this would be the last move down into this area here. When this move happened here, I was on a Spaces. They're asking everybody, "What do you think the price is going to go?" 61,200. I was the only one. Oh no, I see it going to the 46. I see it going to 44. I can even see it go to 36. It's just so funny. Now, last week, I see 70,000. I see new all-time high. I see it. It's funny how people really are very emotional And I gave an explanation of why I believe the liquidity, but nobody really gave an explanation other than they just think or wish or hoped. It reminds me before I dove deep into the TA, and before I started following the money and following the liquidity and following all the liquidation data. It's hard. It's hard to try to determine which route the price is going to go, because you have this bias and you think it's going to happen just because that's the route you wanted to take. And look, I can easily make you a case of the upside just as well I can make one for the downside. But at the end of the day, the data is going to rule it. Look at this, guys. Look at this. There is currently $20 billion in liquidations to the downside. $20 billion. Look at the size of these contracts. Massive, massive contracts. 100x, $80 million. We've got 54, 33. I mean, they just go in the millions. In 372 million. There's 20 billion in accumulative contracts to the downside. So when I look at data like that, and as much as a trader part of me wants to see this go to the range highs and to the all-time highs, I have to take pause and I have to be careful. So I have to analyze this in much, much cleaner. So for me, this is what I would want to do. Right now, okay, we have this green line here. This green line is basically has been support and resistance. There's another one down here. You know what I'm going to do? I'm going to put a channel. I know I'm always putting channels, but you have to understand, guys, channels, when price ranges like that, many times what we end up seeing is a very nice channel setup. And let me show you what I mean by that. Look, watch. If I were to do this here and I would try to carve out an area of support. Let me see here. Give me 1 second. Just let me zoom in a little bit more just to make sure. Okay, support, support, support. Support, support, support. This is the swing high. So I would say this. I would say I would want to put this as my channel. So let's see how well. Let's see if we throw a channel from the swing high to this support, does the medium level, the purple line, the one that I told you last week, I call it a validator. Is there enough data to validate that as the medium line? I don't know. So let's see. To the red line, right to that line. Let's see. Look at look at that. Look at that. Look at that. Again, I can't make this shit up. You look at this and you tell me. Look at the resistance. Look at the resistance. Look at the support. Look at the resistance. 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 Look at resistance here. Resistance. Very, very good area of resistance. So that tells me that now I've got something to work with. I've got an area where the market has kept the price action. Yeah, we've had a deviation here, just like we had a deviation there, and we had a deviation here. But for the most part, look, support, support, resistance. Top of this is going to be our swing high. I like using the swing highs for the top of our channel, and the middle line validates it. So now this helps me to I forgot the word I was going to use. Oh, I had a brain freeze. Anyways, it helps me to keep everything in smaller sequences. That's not the word it's not the phrase I was going to use, but in any case, I had a little bit of a brain fart. This now allows me to have a better, lower time frame expectation. So what I want to do here is look at this. Look at the way the 50 EMA lines up with the bottom. I just noticed that right now. I don't know, which is great because this shows a lot of support in this area here with the 50 EMA. So if we're going to hit this area, which I don't know, I would like for it to go there to give me that back test and get that over with so we can go higher. But again, I don't know. So I want to see a breakdown. How important would it be a breakdown, a back test, and a rejection be? Well, let's look back. Look at all the support. Let's look back. Look, we broke down here, but we immediately recovered and back tested that recovery. Look at all of this support. Look at it. We broke down, but left a wick, candle body closed above it. So if we break down, not only are we breaking down from the bottom of the channel, but we're breaking down from the bottom of the 50 EMA. And if we come back and we back test it, what are the chances are that we're going to drop on that rejection, or consolidate here and then reject. Very good. So this allows me to then start having smaller invalidation areas. So now if this happens, it invalidates any move higher from here, and I start looking for the next move to the downside. The next move to the downside, in my opinion, is going to be the 100 EMA and the hourly time frame. We get into that here. We may see a bounce, maybe put a lower high in the lower time frames, and then finally, hopefully, come down into here. And that lines up with the daily 50 EMA. That lines up, look at that, absolutely perfect with the 200 EMA from the hourly time frame. So great confluence. It lines up with our purple line of our medium a line for the bull break back test that we've been waiting for since we left this area here on, I believe, Friday, I think it was. Everything lines up very, very well to this area. Strong probability of support. Doesn't mean it's going to bounce. It doesn't mean it's going to go to all-time high or to the top of the channel, but at least it gives us a good point on our chart to say, okay, let's come up with a plan here. And here's how I'm going to treat this, just so you know. In this area here, if we can hold above here, I'm going to close my short and I'm going to open a long position because the probability is that we're going to go to the range high. I'm not looking for all-time high, guys. I'm not looking for 73,000. No, I'm looking for the top of the channel that we've rejected for, like I told you before, 5 months in a row. Prove to me we're going to go higher, great. But I need a data point. I need a target price to take profit. That's the most important job for me, is to take profit. So I need a place for that. So my placer for that, for profit, is going to be on the top of that, and keeping in mind that we may just reject here. If we come down here, we may just reject here. And if I'm going to be watching this here, if we consolidate and start trading down, then this is it. This would be the top of this particular move, and we're going to go much lower. Now, if we do go up here, once again, same thing. I'm going to be looking to short, take profits on my long, unless proven otherwise. Let's go back here to our hourly time frame. Invalidation, we fall below it. We trade up to it, we reject, and we come down. Now this one here, oh man, I messed this up. Anyways, you know what I'm talking about. It goes here, here. Now I'm looking for the bottom of this channel. I'm looking for the bottom of this channel to hold, because that is a strong area as well for, look, prior support and resistance. Let's go to the daily time frame. You see a little bit better. So you'll be able to see. Remember, we have two channels: the horizontal and the diagonal. This line coincides with the horizontal. So let me remove the diagonal for just a second. I'm going to do this. I'm going to hide the indicators just for right now, and I'm going to get rid of the diagonal. There's the bottom of that channel. There's a support. There's a support. There's a resistance. There's a resistance. There's a support. So we have a very good area that we can rely on for our next data point to see, can we bounce from here the way we did before, the way we did here, the way we did here, the way we did here, up to the top. And the reason I use a diagonal, because all of these tops off the bounce of the horizontal have led to a diagonal channel. You run a line to the tops of these after they bounce off the horizontal, it carved in a horizontal channel. So I use both of them. I know it's a little bit messy, guys, so I apologize for it. But I just wanted to at least give you an idea of what I'm looking for, one step at a time, basically taking it level by level. Here, I then have to weigh my probabilities. If we come back down here, great. Chances are, like we've done before, that we go to the top of the diagonal top, not the horizontal top, but the diagonal top. But think about the probability and how much it will increase if we break below here and we back test this here. Where do you think that's going to go? I think that has a really good chance of going much, much lower. So in that case, that's a video for another story. I don't want to get too ahead of myself because we're here. We had a beautiful upthrust. And really, all I want to see is us to get back in here. That's it. Get me in here, and we'll discuss in another video another route. There's no point in we're going to go here and then here and then here and then there. No. There's too much going on in the market. There's too many variables that happen in the market for you to try to think that you can plan out an entire move for weeks in advance. It's going to go here, and then it's going to go there, and then it's going to go here, then it's going to go there, then it's going to go. That's crazy. How, the volatility and the news-driven events and the media and the stories and the hacks and the arrest, all of that play an integral part in how the markets move. How are you going to predict every move for the next 5-6 weeks? You can't. Stick to what you have. Stick to the data points. They're not that hard to follow. You got a swing high here. You got a very strong area of resistance here. You had a liquidity grab here that we talked about it. We went, we grabbed it. We saw it on these charts, on the DCT heat maps. I got the liquidation contracts from high block. We have the diagonals. We have a continuation rule move to the upside. Do we come back down into here and validate this? Get a break the higher low. That's what this was. This was a higher low. Low, high, higher low, higher high. Now this hit, remember when this hit 618, it became a lower high. It became a lower high. When this came down here, this was the beginning of the possibility that this is not going to be a lower high, and it's actually going to be a high off the new bounce into a higher high. But that isn't confirmed until this candle closed. When this candle closed, it invalidated this lower high and confirmed a higher low. Now we have a confirmed higher high. Could we come down here and now confirm a higher low? That'd be great. It's possible. On the daily time frame, I would love to see the harmonic pattern play out here. Harmonics don't normally go in a straight line, just go straight. It's going to stair step its way up there. So could we see that? Yeah, we could. I would love to see that. But the market needs to show it to me. I can't assume that it's going to happen. So for tonight, I think the only thing we need to do is pay attention to this right here. That's all we can do tonight. Pay attention to this. Do we get back? Do we leave this top of this channel and close, not just the deviation with the wick, but do we actually close above here? Or do we finally get out of here and on our way here? I don't know. I'm going to go to sleep right now. It's already 8:18. I'll be going to bed. I go to bed early. In another hour or so, I'll be sleeping. And when I wake up, I'll see. I wake up about 4:30 in the morning, 5 o'clock. And I'll see where we're at. At least tomorrow, hopefully, we're out of this channel. And if we're not out of this channel, what do you think is the probability that New York is going to continue to run what Asia did? How often do you see that? That's the better question. How often do you see New York continuing a scam pump weekend? Not very often. Has it happened yet? I've seen it happen. I've 100% seen it happen. I've seen it happen where we ran, and that wasn't that long ago. It was a couple of months ago. We ran for 5 days straight on every session. Asia session, then London session, then New York session, then back to Asia, back to London, back to New York, back. And we did that for 5 days straight. The liquidation data, they were up at $38 billion of the cumulative contracts. So just because I showed you 20 billion doesn't mean anything. That just means they're high. It doesn't mean it has to come down because it's 20 billion. A couple months ago, it went up to 38 billion in accumulative contracts until it finally came down. But I don't use that as my marker for what's going to happen tomorrow because that's not the norm. That's the path of less probability. I like using the path with the higher probability. So let's see what happens tomorrow, guys. Tomorrow morning, I'll be pretty busy because I'll be with my team trading in the morning with my Discord team. We do live trading in the morning. And then I go with my Telegram group, which is where I call out the signals of what to buy, what to sell. We'll start that tomorrow in the morning as well. That's the one that I told you guys. If you want to join, it's $25 a month. You don't want to learn none of this? You don't have to. Just go to my website or send me a DM. I'll give you the link to my website. You go sign up, $25. I tell you, I post on the Telegram, all right, guys, you're buying this coin at this price. Here's the target. Here's a stop loss. I recommend on this particular one, a 5x leverage. Why? A lot of volatility in the market. A 5x leverage gives you a 20% buffer, a 19.76% buffer to be exact, before you get liquidated. So you have plenty of room. If we have some funky news, something comes out, you have news that you know, a lot of times something's going to recover. You have time to step in front of it and say, well, the TA was telling us this, but the news messed this up. But usually we'll go right back to where it was. You want to stay in it? Stay in it. Or is your stop loss triggered? That's fine too. For 88 cents a day is what it comes out to, guys. So it's up to you guys if you would like to join that. It's up, you just let me know and I'll send you over that link. One of the things I did not do for this particular video is that I didn't give my disclaimer out. I'm not a financial advisor. This is not financial advice. This is to be used for entertainment purposes only. This is to be used for your fantasy paper trading. That's it. No real money is to be used. This is for fantasy paper trading. And with that, my good people, I will leave you. Have a wonderful night.